Please allow me to explain our business overview. GMO Financial Gate's business domain is a face-to-face payment service for payment scenes such as physical stores, IoT payments, and transportation facilities. On the other hand, our parent company, GMO Payment Gateway, handles non-face-to-face payments, mainly EC payments. The details of the face-to-face payment services that we provide are as follows. GMO FG provides one-stop services for all payments related to operations between merchants and acquirers. First, in the payment sales business, GMO FG delivers payment terminals such as Stera to meet the needs of each merchant store. Merchant stores can choose from various payment terminals to suit various situations, including stationary types, portable types, unmanned terminals, in which we call IoT terminals. Revenue from terminal sales contributes to initial sales, in which we look at as flow type revenue. In the payment processing business, we charge processing fees when payments are made through the payment terminals we provide to merchant stores. This will contribute to recurring revenue. In the acquiring business, we focus on small and medium-sized merchants, and after deducting a certain amount of spread revenue from the deposits we receive from payment providers, we provide bulk service back to the merchants. This is an image of the difference in revenue between GMO Financial Gate and Payment Gateway. The image on the left is our revenue image, and the image on the right is Payment Gateway's revenue image. For face-to-face payments on the left, initial revenue is recorded when the device is sold, so revenues tend to fluctuate from quarter to quarter depending on the timing of the device delivery and activation when it is delivered to the merchants. On the other hand, in non-face-to-face payments, initial revenue are initial fees and account for a low percentage of revenue, so revenue trends tend to be stable. We aim for leverage growth with the expansion of the cashless payment market and growth of our customers. Among recurring model revenue, stock revenue is fixed monthly revenue, so these are linked to the number of operating terminals. Fee spreads are linked to the number and amount of payments, so the structure is such that they are linked to market expansion and customer growth. The details of recurring revenue will be explained on the next page. This is the explanation of our revenue by item. First, regarding initial revenue, they are divided into payment terminal sales and software development, with terminal sales accounting for a majority of initial revenue. Terminal prices vary depending on the type of terminal sale. Stock revenue is fixed monthly sales received from merchants. We provide a variety of services that contribute to customers' DX transformation, including transaction inquiry and points and QR. Revenue is calculated by multiplying the number of contracts for each service by the individual service unit price or monthly fixed fee. Next is fee revenue. This is a pay-as-you-go type and broadly divided into three types. Regarding the processing fee, we charge a fee of approximately 2 to 3 yen per transaction. For roll paper, we charge a fee equal to the quantity multiplied by the unit price of the roll paper. The last is electronic receipt storage. In this case, revenue is calculated by multiplying the number of transactions by the unit processing fee. Lastly, regarding spread revenue, this service goes mainly to mid to small merchants, in which we charge certain commission rate on the settlement received from payment providers. This is an overview of our business. Now I will explain the credit card landscape overview and our business. Face-to-face cashless payments can be broadly divided into three categories: terminals, processing centers, and payment networks. GMO Financial Gateway has monetization points for all of these. Payment terminals are related to merchant stores on the left, and we work with alliance partners such as terminal manufacturers, POS vendors, vending machines, and self-checkout manufacturers, and provide optimal solutions to each merchant store. Our processing center processes the transactions using our terminals. The data processed at our payment center is for credit card payments. For electronic money and QR code transactions, we rely on our alliance partners to process them. Regarding payment providers, we continue to acquire merchants primarily through alliances with acquirers such as credit card companies and banks. By using our processing center, we are contributing to the cost reduction for merchants and payment providers. Compared to the other companies operating in our business area, we are the only company that provides one-stop services related to face-to-face payments. This allows us to flexibly build alliance schemes with other companies, including competitors, during each business phase. Now I will explain the domestic cashless market and total addressable market. The face-to-face cashless payment market in 2023 is estimated to be approximately 112 trillion yen. It is estimated that it will reach 167 trillion yen in 2027. Including cash payments, the amount will reach 322 trillion yen in 2023, so we believe there is still room for growth in the cashless face-to-face payment market. In the unattended payment field, or IoT unattended field, our payment processing amount is 0.5 trillion yen and the market estimated at 30 trillion yen, and we believe there is still room for further expansion in this area as well. The domestic cashless market is steadily expanding. The Ministry of Economy, Trade and Industry has set a goal of increasing the cashless payment ratio to around 40% by 2025 and to around 80% in the long term. With these measures as a tailwind for our business, we hope to continue to increase the cashless payment ratio and increase our market share. In order to expand payment volume along with the market, we have developed a new route payment network. By using our payment network, we help our merchants reduce costs and improve our capabilities and competitiveness of our alliance payment partners. In addition to utilizing the new route payment network, we will work with our alliance partners such as Sumitomo Mitsui Card to expand our GMV, which is approximately 8 times our current GMV, and further expand the total addressable market of the face-to-face cashless market. Please allow me to explain our midterm growth plan. Our company is currently in the phase of expanding its market share. In order for the merchants to use our payment platform, we are currently focusing on delivering terminals provided by our company to merchant stores and putting them into operation. During the market share expansion phase, our overall revenue is affected by our terminal sales, so revenue may fluctuate significantly from financial year to financial year. As the number of operating terminals steadily increases, recurring revenue is expected to gradually expand. Expanding recurring revenue with higher profit margins will contribute to further operating income growth. We plan to continue growing at a CAGR of 25% for revenue and operating income at 25% year-on-year. This is our midterm financial plan. We first created a midterm plan at the time of IPO in 2020. We have already achieved the operating profit target of 1 billion yen for 2024, in which we set as a goal in 2020. In 2023, we formulated a new 5-year plan for 2025 and beyond, aiming for operating income of 1.5 billion yen or more in 2025, 3.5 billion yen or more in 2028, and 5 billion yen or more in 2030. We are aiming for plus 25% growth year-on-year. For specific business strategies, we would like you to see action plans 1 to 4 listed on this page. By incorporating these strategies into various medium to long-term measures, we hope to achieve our target of operating income of 5 billion yen in 2030. Next is the current status of our strategy. We are currently accelerating our vertical expansion strategy, primarily targeting large merchants. We plan to use our solution assets to respond to the individual needs of large merchant stores, such as supporting unique points that franchise stores have introduced, reducing administrative burden, supporting digitalization, and such. By responding to these needs in detail, we will accelerate the acquisition of large corporate groups by deploying the solution knowledge gained from acquiring projects to multiple major corporate groups. As of now, we have a pipeline of large-scale projects such as Company A, B, C, and D. Next is regarding the mobility domain. We have been promoting the usage of credit cards for public transportation for several years, and currently 100 institutions are using our platform. With the number of inbound tourists expected to increase in the future, it will now be possible for foreign tourists to easily use public transportation using their existing credit cards. In the future, we will continue to accelerate introduction in all of Japan. Next is our efforts in IoT and unattended payments. Currently, there is a continuing shift from manned terminals to unattended terminals due to the need for labor-saving cashless payment machines and such. Payment machines are becoming increasingly unmanned. In fact, it is being introduced at major 100 yen shops, major coin parking companies, fast food chains, and such. These IoT terminals are planned to be introduced at locations such as supermarkets, drugstores, and automated payment machine companies. This concludes the explanation of our medium to long-term plans and growth strategies.